Assalamu alaikum friends, welcome to question number 2 from your March and June 2021 paper. Okay, so as you can see on the screen we have the scenario 2. Okay, so let us go through the scenario 2 before we go through the requirements in detail and also the exhibits in detail. You can see that there are 4 exhibits and the response option is only the word processor. Okay, and this is a 25 marks question. Yesterday I have covered a 50 marks question from section A. Today and tomorrow I'll be covering question number 2 and 3, which is for 25 marks. Here we don't have the professional marks, and here we don't have the format like a briefing note like how we had for 50 marks question. We have to start with introduction, then we had to do in the main body we had to write in paragraphs with subheadings, and then we had to finally write a conclusion. Section B, question number 2, it's not like that. So you're more free to write in your own way. Okay, but you still have to write in paragraphs, you still have to use subheadings, you still have to make it clear which requirements you are answering for the examiner. So let us read this first 3 lines before we actually jump to the exhibits. I think you can see the screen because it's very small. I can understand the font is very small because the screenshot when I took there also this font was very small. I couldn't increase it, but I hope this is clear enough. Okay, so it is 1st of July 2005. You are an audit manager. So who are you? You are an audit manager in James and Company, a firm of chartered certified accountants. Your role includes performing post issuance audit quality reviews. Okay, and you are currently reviewing the audit of the bond group, the group which had a financial year ended 31st Jan 2005, and in respect of which an unmodified audit opinion was issued last month. Okay, because section B questions you'll be expecting more, not like planning, audit risk and all those things. Section B is more like audit report. Okay, you are giving an opinion, what is the opinion, so all those things. Okay, the group supplies computer components specializing in graphic cards. So what do they computer components specializing in graphic cards? You are reviewing the group audit file as well as the audit file for 4 of the group's subsidiaries. So these are the 4 subsidiaries of the group that you are reviewing their audit files. Okay, all 4 of the subsidiaries are significant component of the group and have a financial year 31st Jan 2005. Each subsidiary's audit opinion was also unmodified. You have been provided with the following exhibits which provide information about the bond group and the points you have identified for each subsidiary in the group. So these are the 4 subsidiaries of the group company: Cameron Company, Marsden Company, Dean Company, Horner Company. Okay, so now let us go through the requirements. In relation to the matters described in Exhibit 1 to 4, comment on the quality of the planning and the performance of the group audit. You have to comment on what? The quality of the planning and the performance of the group audit and audit of the components of the group, that means of the subsidiary. Discussing the quality control and other professional issues raised in respect of these 4 companies. 8 marks for Cameron, 5 marks for Marsden, 5 marks for Dean, and 7 marks for Horner. Okay. So now let us go through the exhibit. Exhibit 1 is for Cameron Company, the first subsidiary. So each exhibit is for each company. Let's just read first. Okay, it's a little bit blurred, I can understand guys, but then I had no option, right? Okay, so your firm audits all group companies with the exception of Cameron Company, a subsidiary which was acquired during the last financial year, with the exception of, that means you're not auditing this. Cameron was acquired by the group in April 2004, that means last year, and it is audited by Carey Associate, a small local firm. Cameron also outsources its internal audit function to Carey Associates. Outsources its internal audit function to whom? To their auditor. So the section of the external audit working papers provided by Carey Associates and the relevant to internal control remain contains very little documentation. Okay, that are relevant to internal controls because you need the internal control when you're auditing. But here the documentation is very little other than a cross reference to the files maintained by the internal audit team and a statement that we can rely on the internal controls as they were tested by our firm in May 2004. Okay, in respect of the Carey Associates, this is the former auditor they are talking about. The group audit working papers contain the following statement. What was the statement? Our firm can rely on the work of Carey Associates as one of the James and Company's audit partners left the firm to become an audit partner at Carey Associates and he was involved with the audit of the Cameron Company. Other than some background about Carey Associates, which had been printed off from the firm's website to provide background information, there is nothing else on file in relation to the firm. Now, the group audit working papers also include a note relating to the consolidation of the Cameron into the group financial statements. Cameron prepares its individual financial statements using local accounting rules, which is allowed under national regulation. It does not use IFRS, which is applied by the rest of the group. You see, so the group audit partner commented in the working papers that local accounting rules are very, so this is what they have commented, that this is very similar to IFRS standard. So there is no need to perform any additional audit work in relation to the consolidation of the Cameron due to it using different accounting policies for the rest of the group. Make sure that when you are reading the exhibit, you understood the whole scenario. If you are not understanding it, reread it again until you have understood it properly, so that time is not wasted. So now, since the first requirement is on Cameron Company, so by reading this exhibit 2, you can straight away answer exhibit 2, the first requirement. For that, okay, so how are you going to answer this? You start by mentioning the company, because all your answers will be there in the word processor. So you have to mention that it's 2A and it's for which company, which subsidiary Cameron Company. Okay, so you have to talk about their work, performance of their work, and the control, the quality control. Okay, in case you forgot the requirements again, okay, go back to the requirements and check what are the requirements. You have to comment on the quality of the planning and the performance of the group audit and the audit of the components of the group, discussing the quality control and other professional issues raised. Okay, first of all, before you write this, you have to think of the points that you're writing. How many points did you collect? Because it is for 8 marks, so at least you have to write 4 points to get the 8 marks. 4 into 2, 2 marks per point. So if you're writing 4 points, 4 into 2, you'll be getting the 8 marks. Okay, so now let's see. There are problems indicated by the review in relation to both the audit of Cameron's individual financial statements by the Carey Associates and in the way in which the group auditor has dealt with this issue of there being a new component auditor involved in the group. Okay, so now there are two issues. One is related to the individual financial statements. The other one is how the group auditor has dealt with that issue. So you have to write a subheading when you're writing about that issue. One issue is relating to internal audit. Internal audit. Okay. So let us see what's the issue relating to internal audit. First, it is not appropriate that Carey Associates as relied. Straight away you say, okay, first, second, third. So you start by saying first, whichever is very significant that you write first. So in this case, it is not appropriate. You see, that Carey Associate as relied on the work performed by the internal audit team. You have to mention the name of the previous auditor. Why? Because they have relied on the work that has been performed by the internal audit team. In this case, it is not appropriate. Okay, so that's an issue. Now, you are explaining that point here. So that's the first line. Now this line you are building up, explaining why they cannot rely on the internal audit team. So a significant, okay, just let me minimize this a bit so that you can see the whole screen. Okay, a significant self-review thread to the objectivity of the carry associates arise from the firm providing both internal and external audit services to the Cameron company. What happened? There is a self-review thread to the objectivity. Why self-review thread? Because they are only doing the internal services, internal audit in that company, and they are the one who are the external auditor, the carry associate, right? He is doing the internal part, internal audit there, and he is only again auditing that part. So it's like you are marking your own answer. So it's self-review thread to the objectivity because they are not independent now of the company. So it's a self-review thread to the objectivity. For identifying this, you will get marks. Self, which thread and thread to what? Which ethics? Fundamental ethics. Objectivity, integrity, which one out of five? So it is objectivity. Of whom? Of the carrier associate. Why? Why is a self-review thread to the objectivity? Because the firm is providing both internal and external audit services to Cameron. You see? Both internal and external audit services. Can you provide that? That's the question now. Next line you have to say that whether it is allowed or not under a guideline or under a rule or under a standard. So here, according to IESBA, okay, the International Code of Ethics for Professional Accountants, the code, it's a code that suggests. So you have to make mention of this code, okay? You see, that code is the knowledge that you have learned. Now you have to put this in this answer because it is very appropriate with the answer here. What the code says. So the code suggests that providing an audit client with an internal audit service creates a significant self-review thread because in subsequent audits the audit team will use the internal audit work performed. So when you are doing the subsequent audits, what happens? The audit team will rely on that internal audit work performed, but that internal audit work is performed by you only, leading to potentially over reliance, right? There is therefore a risk that the auditor has not been performed with sufficient objectivity. It's a risk that they have not performed with sufficient objectivity, and also professional skepticism. So in addition, it is not clear whether appropriate safeguards are in place. They have not mentioned anything about safeguard. If they have mentioned anything that safeguards are there, you have to mention it in your answer. If they have not mentioned it, you can write like this, that it's not clear whether safeguards are put in place or not to reduce the threat to an acceptable level. How? By ensuring that two services were provided by separate teams. Nothing was mentioned like this. So give examples also to show that safeguards like what. For example, they can use two separate teams for the two services. One will be giving internal audit, the other one will be providing the external audit. In that case, they are independent. So there's a risk that insufficient audit evidence. Now we are going to the second point. This was the first point. First point in first paragraph you have explained. Okay. How you explain, how many lines you are going to use, it's totally up to you. But you have to do it in the time given to you. Okay. That's the whole point. So first point we told about, they are doing both internal and external audit services. Second point, there is a risk. By reading the first line, examiner should understand what point are you talking about. Okay. For example, the point is the first point which you told. The main point is here to here only. The rest all is explanation of that point. Why they should not rely on the internal audit team. Second one also, it's like this. Here to here is the first point. The rest all you're explaining that point, expanding that point. So when you're writing, also make sure that your first line, when you're writing, first line of the paragraph should be such that all the important words are there, right? The rest, so that examiner knows that the rest of the paragraph is about that point only. So what is it? There's a risk that insufficient audit evidence has been obtained over internal control. The second point from internal audit is that audit evidence is insufficient. It's a risk because we are talking about quality control, remember, planning. So we have to talk about evidence and all that has been obtained over what internal controls. Regarding to internal controls, audit evidence are insufficient. So when it's insufficient, you have to think which standard is breached and make sure that you write that standard here. So this is a breach of ISA 315. Identify and assessing risk of material statement through obtaining an understanding of the entity and its environment. Okay. Which requires, so you don't have to write all this, okay? You can just cut out this. You can just write ISA 315, that's enough. It's understood. Okay. So this is the breach of ISA 315, which requires the auditor to obtain an understanding of the internal control relevant to the audit, including evaluation of the design and the implementation of the internal control. In that understanding of internal control, what I included? Evaluation as well as implementation of internal control. Okay, it appears that this audit work has not been performed at all due to over-reliance. Because the external auditors are only doing the internal audit work, so they are over-reliant on their work now. You see? So they are not performing sufficient test to see whether internal control is working or not. Audit evidence is insufficient. Now, the third point. You see, every point is described in. If you write 2 points, you will get the marks. Okay? Because each point for 2 marks, so you can write 2 points to get the 8 marks. But here, you can see the answer is pretty lengthy. We'll go through the other points also. They have given all the maximum answer that a candidate can give for this answer. That's why the answers are very lengthy, if you see. But your actual answer will not be this big. Because come on, the time given to you, no one can write this much. Okay, so this is the third point. What is the third point talking about? There is a further issue. So every paragraph is giving different issues. One issue only, that only they are explaining for 4-5 lines. Which is related to internal control, okay? Everything is related to that internal control only. First one, they are relying on internal control. Second one is the evidence is insufficient. Third issue is timing of when the internal controls have been tested, which took place in May 2004. So the financial year ended on 31st Jan 2005. So it appears that the controls have not been evaluated for the last 8 months of the financial year. This is an issue because internal controls have to be tested very frequently, whether there are some changes or not. Now, which standard are you going to use of ISA 330? The auditor's response to assess risk states. So what does ISA 330 states? That if the auditor intends to rely on controls over a period of time, the test performed must be able to provide audit evidence that control operated effectively over that period. For example, if the auditor wants to rely on that control for 12 months, so that audit evidence that the auditor has collected, okay, should say that this control is working effectively during that 12 months. But in this case, this is not the case because for last 8 months, they didn't even test also. Okay. So what happens? The risk of over-reliance discussed above, okay? This increases the risk of over-reliance discussed above. They are over-relied. The auditor is over-relied on his own work because he was doing internal auditing, no? So he's relied on his own work rather than going for more evidence. As there could have been significant changes. Yes, there could be some significant changes during that 8 months in the internal control, which has not been identified by the external audit team. So 3 issues they have talked about. Now, it's like you are giving a final conclusion. So this raises the concerns over the quality of the audit? You have to talk because the question asks, the requirement says the quality. So this raises concerns. That means the audit was not of a quality, right? It's not of a quality. It's of a bad quality. So this raises concerns. All these three issues raises concern about the quality of the audit, which has been performed by Carey Associate. Given that the Cameron is a significant component of the group, any material, because why Cameron is a significant component of the group. So that's why if there is any material misstatement which was not detected or which has not been detected by the component auditor means Carey Associate. If he does not detect any material misstatement, then what can happen? What would be the implications? It could have implications for the group's financial statements, which could also be materially misstated, you see. So what happens? In addition to the self-review threat to objectivity, a threat of management responsibility arises. There's a threat of management responsibility, whereby the audit firm, by performing internal audit services, is making decisions and using judgment. Okay, so if he is performing the internal audit services, that auditor, what are they doing? They are making the decision, they are only using the judgment, which is probably the responsibility of the management. It should be the responsibility of the management, but the auditors are performing it. An audit firm should not assume management responsibility. You cannot do the job of the managers. It is their responsibility. So this raises concerns over Carey Associates' general approach to ethical issues. Ethical issues can come in section B also, like this. Okay, and whether the ethical threats raised have been properly evaluated by the firm or not. Coming to the next issue, right? Group auditor evaluation of Carey Associate. So earlier we talked about internal audit. Now we are talking about the group auditor. Okay. So the comment made in the group audit working papers indicates there have been a comment made in this audit working papers, right? What was that comment? That they don't have to go for additional evidence. It's not needed. They can rely on it. Okay. So what does it indicate? It indicates that there has been no understanding obtained by the group auditor. Group auditor didn't get any understanding of it in relation to the scope as well as the extent of the audit evidence obtained by the component auditor. Component auditor means Carey Associate. Okay, Carey Associate is the component auditor. So this is a significant quality control problem. This is a quality control problem. And also it is a breach of ISA 600 special considerations. It deals in special considerations. Okay, audits of group of financial statements, including the work of component auditor. This is dealt under ISA 600. So wherever you can see that this situation is dealt under any standard, you have to make reference to that standard in your answer. Okay, every answer has some standard. Here it is ISA 600. So what does ISA 600 says? You have to say that according to the standard, what are they saying for this situation? ISA 600, what do they say? Which requires? They require that the group audit team provides an understanding. Whoever is the group audit team, okay, that is a new auditor, they should obtain an understanding of the component auditor first of all, and be involved also in the component auditor's risk assessment. Rather than just blindly relying on that Carey Associate, you have to be first obtain an understanding, then you have to be involved in their risk assessment also to identify that there are there any risk of material misstatement or not. This is especially the case given that Cameron is new component of the group, and this is James and company's first experience of working with Carey Associate, because this is their first experience. So keeping this in mind, they should obtain understanding, they should be involved in their risk assessment. Okay, now next. So this is about audit working papers and all, relying on this component auditor. Next, the fact that the audit partner has left James and Company. Why? To work as an audit partner at Carey Associate. Has no bearing on whether James should have obtained an appropriate understanding of Carey Associate. Okay, so this has no bearing, okay, whether James should have obtained an appropriate understanding of Carey or not. An understanding of whether Carey Associate follows the same ethical framework as the rest of the group. An understanding of their competence is required. You have to see the understanding with the rest of the group and also their competence. It appears that the group audit has been conducted without this necessary understanding. You see, they have just only conducted that audit without this understanding that needs to be obtained. And this is again a breach of ISA 600. So which thread is it? This is a familiarity thread to objectivity, because they are now familiar, because a partner from here left and came here. So they're familiar with each other now. So this is a familiarity threat to objectivity. Again, they are not independent now. So objectivity arises. Why? Because of the connection which the group audit team will have with the audit partner who is now working for our Carey Associate, who had previously worked on the external audit of Cameron. So the familiarity threat means that the group audit team may have been over relied on the work of the component auditor because of that familiarity threat. It could be in that. Due to this close working connection and failed to apply appropriate professional skepticism, also they failed. Now, the third issue, use of local accounting rules. Okay. Cameron uses local accounting rules in his individual financial statements, which is acceptable. Okay. In the individual financial statements, they can use any accounting rules. That is acceptable. However, for the purpose of consolidation, the same accounting policies must be applied across all group companies. There you cannot say I'm going to follow my rule and the group is going to follow their rule. No. All has to follow the same accounting policies. And this is required by which standard? In SBR IFRS 3. The fact that the group audit partner has concluded that what did they conclude? That no work is needed in relation to the accounting policies indicates poor quality. This is a sign of poor quality audit work, and also insufficient audit evidence has been obtained. Adjustments may have been necessary to Cameron's balances and transactions before the consolidations. You have to make adjustments to their balances and transactions before the consolidation. Why? Because for comparing, when you want to compare with the previous year, for comparative reasons, the opening balances and the transaction has to be in the standard that other group companies are following. That's why you have to adjust it before the consolidation itself. So with no audit work being performed to assess whether this is the case, whether the adjustments have been done or not, there is no external audit work that has been performed. So because of this, because no audit work has been performed, what is this? There's a risk of material misstatement in the group's financial statements. Now, the fact that it is the group audit partner who reached this conclusion. Who reached this conclusion? Group audit partner. So what does this indicate? This indicates a lack of competence and raise concerns over the quality of the audit as a whole. That means he's not competent enough about the rules. Okay, make sure that you give a conclusion also for each point, like how for use of local accounting rules you are giving a conclusion in 1 or 2 lines. Come into the next company, Marsden Company. We need to read exhibit 2 for it. Marsden is located some distance from the rest of the group and it is audited by a local office of James and Company. Your review has found that there were no formal reporting from the subsidiary audit team to the group audit team and communications were often not documented. There were no evidence that the group audit team has obtained a copy of the subsequent event review performed on Marsden, and there was no evidence that group related parties had been communicated to the subsidiaries audit team. So many issues are there, right? It's for, I think, 6 marks or 5 marks. So depending on that, let's see. There are so many issues you can talk here. First of all, this has been audited by the local office, this subsidiary. Okay, but the fact that James and Company is auditing the group and the subsidiary does not mean that the communication between the audit team should be lacking in terms of the formality or the level of documentation. Okay, which standard requires documentation? ISA 600. It requires documentation on range of matters, not just one. What are those matters? Let's go through this 3 matters. Number 1, what is the nature, what is the timing, and what is the extent of the group's audit team involved in the work performed by the component auditor on significant component? Next, the group audit team's review of the relevant parts of the component auditor's audit documentation and conclusion. You just cannot rely on the component auditor. You have to review their work. You have to see whether they have documentation in place or not. What conclusion they have reached, on what basis. Also, the written communication between the group audit team as well as the component auditor about the group audit team's requirements. So all this has to be documented. What communication they had with each other, the 2 audit teams. Whether they have reviewed the work, whether there were documentation in place relating to the component auditor's work. All this thing has to be documented. Okay. So for all companies within the group, regardless of materiality, don't take materiality into picture, but for all the groups, the group auditor should evaluate and review the work done by the component auditor. It does not matter whether materiality or not. Okay, it's your job that you have to evaluate and you have to review the work that is done by the component auditor before you rely on them. So the component auditor may be asked to prepare a report. They can be asked to prepare a report summarizing the work that they have done, and this could be in a form of an executive summary or in a memorandum of audit issues arising from the audit of the company. So you can tell them to give the summary of the work that they have performed. Alternatively, the group auditor may issue a questionnaire to be completed by the component auditor, which would highlight key issues arising from the audit of the component. So in the absence of the written documentation, what can you do? It's like you're giving them some actions, what they have to do, suggestions, what they need to do. It is difficult to understand the matters on which the group audit team and the component team has communicated. If documentation is not there, written documentation, it becomes very difficult. What are the things you have discussed among yourself, right? And whether matters have been resolved or not, that is also an issue. And also the impact which this matters might have on the group's financial statements. All those things you will not know. If written documentation is not there, it becomes very difficult. Specifically, okay, now you have to refer to specific things. Okay, specifically this becomes more hard in relation to what subsequent event review. That means events after the financial reporting period. So the group audit team, they should have requested the subsidiary. You have to give them some actions that they need to do. What the group audit team should do, what the component auditor should do. So the group audit team, they should have requested the subsidiary audit team to provide relevant information or to perform a subsequent event review themselves. If you are not performing, then you can tell the audit team of the subsidiary to do the review themselves. Again, ISA 600 requires what? Requires the group audit team or the component auditors, either of them, to perform procedures designed to identify events at those components which occur between the dates of the financial information of the component and the date of the auditor's report on the group's financial statements, and which may require adjustments. It might require adjustments or disclosure in the group's financial statements. So either the group audit team or the component auditors, they can perform procedures to identify whether there are events to say that okay, these things is going to happen. Okay, between the financial statement date and the auditor's report during that period. If neither audit team has performed, so if none of the audit team has performed that subsequent event review, okay, there may be matters which have not been identified. Maybe there are some matters, but it's not identified because they haven't performed that. None of the auditors have performed that review, which could be adjusting or non-adjusting events. Okay, so because this might impact the subsidiary or group financial statements. Now, ISA 600 requires that the group audit team communicates its requirement to the component auditor. Again, ISA 600 says that they have to communicate their requirement to the component auditor on a timely basis. So this paragraph is about that communication between the group audit team with the component auditor. So this communication shall set out the work to be performed, the use to be made of that work, and the form and the content of the component auditor's communication with the group audit team. Specifically, ISA 600 requires the group audit team to communicate a list of related parties. What does ISA 600 say? The group audit team, they should communicate the list of related parties that are prepared by the management, group's management, and any other related parties of which the group audit team is aware. Without this communication, what happens? The auditor of Marsden will not be aware of the work which needs to be performed in respect of the related parties. They don't know what work they should do regarding the related parties if they don't have this communication. So the audit evidence obtained is also likely to be insufficient or inappropriate if that communication is not there. You have to say the impact if communication is lacking on those places. ISA 600 also requires component auditors to communicate any related parties which has not previously been identified by the group management or the group engagement team. If the managers didn't say anything, right, the component auditor should communicate. To whom? The group audit team. They are required by ISA 600. So if the component auditor has not made this communication, then there is a risk that the related parties have not been identified and reported appropriately, and that disclosures may be incomplete. It might be ignored. You see, related parties might be there, but it might not be disclosed or reported. Why? Because the communication was not there among the two auditors. So no one knows about it. So now coming to the third company, which is Dean Company, Exhibit 3. Dean Company owns a small number of shares in Corden Company amounting to 2% shareholding. The investment is accounted for as a financial asset at fair value through profit and loss as required by IFRS 9. Corden's shares are not traded in an active market and by the value of 680,000 which is recognized in Dean's financial statements. Dean Company's financial statements is management estimate. It is the management's estimate of the fair value based on an offer received for the shareholding. The audit team checked the arithmetic of management's computation but did not obtain further audit evidence. Further audit evidence they did not because according to the audit conclusion, the value of the shareholding is below the group's maturity level. That's why they don't think audit evidence was needed, right? So the latest financial statements of Corden prepared by 31st Jan 2005 are included in the audit file to provide background information and show that the company has net assets of 550,000. Materiality for the group consolidated financial statements were determined to be 350,000. So this is talking more about materiality and all, and also the fair value. So let us go to Dean Company, right? So here, what is the main issue? One is insufficient audit evidence. Straight away you talk about that. So insufficient audit evidence has been obtained in relation to what? Financial asset. So the audit team should not just have accepted the management's valuation of 68,000. Now you are saying that they should not have just accepted. You are suggesting them what they should have do and what they should not do. Because they accepted that, but you are saying that they should not accept the Management's valuation of 68,000, which could be because this could be based on some inappropriate assumptions also. An offer of 68,000 may have been received, right? It may have been received. That does not mean that you have to take the valuation of 68,000 only. But this has also not been verified. It was not verified by the audit team. As there is, and also there is no active market. As there is no active market for the shares, the fair value should be based on, if there is no active market, how are you going to decide on the fair value? This should be based on an exit price at the measurement date. And it should reflect assumptions which market participants would use, including risk. Even if the offer was genuinely received, this is not an appropriate basis. This is not an appropriate basis for the valuation of shares. So you are telling them that this is incorrect. This is what in AAA you are supposed to do. You should identify that incorrect measurement or recognition or something. That incorrect thing, and you need to correct it. So this is incorrect, the way they are valuing their shares. Even if that offer is genuinely received. Okay? Especially given that the offer was made 9 months before the year end. Especially in a condition when that offer was made 9 months before the end. You know, the incorrect thing is that you cannot measure it by this way of measuring, okay, the management's valuation. Now you are linking this to the case study. This is the fact that you are given from the case study, from the scenario, that the offer was made 9 months before the year end. You should be able to do this with all the other things, all the other answers. Okay. So an appropriate level of professional skepticism has not been used. You should have used this, but it was not used in the audit of the financial asset. In audit of what? Be very specific. Audit of financial asset. Don't just say they should do like this, they should be more ethical, they should follow professional skepticism and all. No. You are giving facts, you are giving figure from the case study and answering using your knowledge. That this should be like this is incorrect, this is the correct method. Now we are going to this. We are going to the fair value. Whether this is correct or not and how it should be determined. So fair value should be determined close to the financial year end, not 9 months before. And the 68,000 might reflect out of date perceptions of the value of the code, and it might be out of date. So from the information provided, you see this is the evidence that you're talking about. From that information provided, it seems that the financial asset could be impaired and it is likely to be overstated in value. Dean's company's 2% shareholding is recognized as 68,000. However, 2% of the net assets of Corden at 31st Jan 2005 amounts to only 11,000. What was the net asset that was given? It was given 550,000. If you take 2% of this 550,000, it would be 11,000. It would be 11,000 only net asset. But if you have recorded that, it is 68,000, very high. Where is 11,000 and where is 68,000? Look at the difference. So if so this shows that it could be impaired, but you are showing it more. Incorrectly, you are overstating financial asset in the financial statement. So if the financial asset is overvalued, then any necessary adjustments would have a profit implication, and this is not mentioned in the audit working paper. Let's assume, okay, that this is overvalued and you're trying to do some adjustments to this now. What happens when you try to do any adjustments to this? It will have an impact on your profit and loss account. If you are trying to impair this and show that impairment, remember that impairment will go in the profit and loss account only, so it will reduce your profit. But that implication, that profit implication, was not mentioned in the audit working paper, that this would be the implication of profit and loss. Next, using group materiality. So the topic is group materiality. Using this in the audit of the subsidiary is not appropriate. So the value of the financial asset is less than the group materiality, if you see. But it might be material to Dean Company's individual financial statements. Maybe yes, to the group it might be less, but individually it might be material. It is not clear that the individual audit team determine an appropriate level of, they didn't say what is the individual audit team's appropriate level of materiality. They didn't determine it. As part of their planning of the individual company audit, the group audit team should determine the component materiality to be used by the component auditors in their audit of subsidiary balances and transactions. And component materiality should be lower than the materiality for the group as a whole. Definitely for the group, materiality will be more because there are so many companies there. But for the component materiality, that means just for Dean company, materiality will be lower. Right? So therefore, it seems that the group audit team has not communicated an appropriate level of component materiality to the team auditing this one. They have not communicated this, an appropriate level of component materiality to the team auditing the Dean company. Now it's like you are giving a conclusion. So while the possible adjustments in relation to the financial asset are not material to the group, maybe the adjustments that you have to make, they are not so material to the group, but they could be material to the individual financial statements. You see, you are repeating. So this is like you are giving a conclusion now to what you have written all the points. And they said is that an inappropriate audit opinion has been issued in relation to the subsidiaries individual financial statements. Right? You might have issued an inappropriate audit opinion for the subsidiaries individual financial statements. Right? There could be a risk if you make any adjustments. Coming to last company, Exhibit 4. So during the audit of the owner, an audit team became aware of the breach of the data protection regulation, whereby an employee of the company had made its customer database available to third party. The disclosure is in contravention of the regulation. The audit working papers refer briefly to this situation and conclude that it has little to do with the audit. No one outside the company is aware. No further investigations also were made by the audit team, and the audit manager noted in the working papers that the matter does not need to be discussed any further with Honor companies or the group's management team, as I have received assurance that the person responsible for the breach of regulation has been dismissed. You see, so many issues are there you can talk about. So if you see, for D, answers will be lengthy because there are so many issues. First of all, they made an incorrect conclusion that no work is required. It is not in the scope of the audit, all those things. Okay, number one, there has been a breach of relevant laws and regulations. It's very easy to identify. Such things are very easy. See, section 2 and section B, both question number 2 and 3 are much easier compared to section A, I would say. First of all, the exhibits are shorter, so it's easy for you to retain the information also. Okay, and you can write the points in different paragraphs, the issues relating to that company. So first one is breach of relevant laws and regulations. The audit team should have considered the requirement of which standard? ISA 250. ISA 250 because it considers the laws and regulations of the audit. So ISA 250 states, what does the standard states? That while it is the management's responsibility to ensure that the entity's operations are conducted in accordance with the provisions of laws and regulations, whose responsibility that it complies with rules and regulations? The management's, not the auditors. Okay, the auditor does have some responsibility. They cannot say it's the management's responsibility, so I'm not responsible at all. No, they have some responsibility in relation to compliance with laws and regulations, especially where non-compliance has an impact on the financial statements. Not all non-compliance will have an impact on the financial statements, but where this is the case, then it is some responsibility has to be borne by the auditor as well. Coming to the next issue, the next problem. Understanding of the legal and the regulatory framework. So auditors required by this standard that they have to gain an understanding of the legal and the regulatory framework. They should understand this, in which the audited entity operates. You should know their rules and regulations of that entity. You cannot be blind. Okay, so this will help the auditor to identify non-compliance and also to assess the implications of non-compliance. Therefore, the auditor should ensure that the full knowledge and understanding of the relevant data protection laws and regulation is obtained. They should have the understanding of this data protection laws and regulations in order to evaluate the implications of non-compliance, so that they know that if they don't comply with these laws and regulations, what could be the implications. For that reason, they have to have the understanding and also full knowledge of this. ISA 250. Again, they are talking about the non-compliance when it is identified or suspected. So where ISA 250 requires that where non-compliance is identified or suspected also. You didn't identify, but you're suspecting that there could be a non-compliance. What should the auditor do? They shall obtain an understanding of the nature of the act and the circumstances in which it has occurred. That means you're looking into the facts. Why the company didn't comply with that law? Why there's non-compliance? What was the nature of the act that led it to be not complied? Any further information to evaluate the possible effect on the financial statements, and also you're going for further information to see, to evaluate what could be the effect of that non-compliance on the financial statements. Therefore, the procedures should have been performed. You should perform procedures. You should say this in your answer, that you have to perform procedures. Why? To obtain evidence. About what? Suspected non-compliance. You just cannot say they didn't comply. Where is the evidence? So that's why you have to perform some procedures to get that evidence, to say that you are suspecting non-compliance. For example, so now you are explaining with an example. To discuss the breach with the management. How can you perform the procedure? You can discuss this breach with the management to understand how it happened. Directly talk with the management, right? Whether it was due to a deliberate action or an unintentional mistake. And who was responsible. All these things you can understand if you go and talk with the management. In addition, what can they do? The audit team should have performed further procedures. Why? You are giving now an example. Rather than just saying follow procedure, you are exactly telling what procedure through an example. So make sure that when you are answering this technique, you also apply. You give right with examples. Further procedures like what? Like you discuss with the company's legal advisor, like lawyers and all, so that you can understand what are the legal consequences of that breach. Because you are an auditor, you will only understand the auditing perspective. What are the legal consequences and all, you as an auditor will not understand unless you go and talk with that legal advisor and gain an understanding. Your understanding. So all those things you need, it's obvious, but you need to write in your answer. So from the information provided, it seems that the audit team failed. Don't just say audit team has failed or they are not doing. You have to say this, that from the information that has been provided to you. Okay. This makes your answer more reliable and more credible if you write this from the information according to the source. It seems that the audit team failed to obtain more information or evidence. They didn't obtain more information. They didn't even obtain more evidence also. They were not bothered about it. Why? Because they had a belief that the situation had little to do with the audit. They think it has nothing to do with the auditor, so they just left it. So audit has therefore not been performed appropriately. It has not been performed as the requirements of with standard ISA 250. The matter could be immaterial in monetary terms, but without further investigation, it is not possible for the audit team to reach this conclusion. Yes, you can say, but if you don't do any investigation, if you are just leaving it like that, how will you know whether it is material or not? You just cannot reach that conclusion that it is immaterial. No. However, in many jurisdictions, fines and penalties associated with data protection breaches are often significant, right? Some countries, they take this as a very serious offense, very serious breach, that fines are very high, very, very high. And also the matter could be material by nature also. So regardless of the monetary amount involved, further work should have been performed. You see, through this answer, what did you understand? You are giving more like actions, suggestions, recommendations to the auditor. What should they do? What should they do? What should they do in this situation? To, to tell them what to do, you need your judgment. You're understanding? You have to apply that judgment in your answer. Because from textbook, you will not be able to give these ideas, because this is very specific to this case study only, you can see. And this case study you have never gone before, this scenario. Only in the day of the exam only you will go through this. scenario. That's why keep your mind alert, open, okay, and be aware, okay, be there to give your judgments, to give your recommendations. It definitely does not come at first instance. You need to practice lots of questions to reach to that level where you can give advice, where you can give conclusions, where you can tell them do this, they have to do this, they should not do this, like this. Audit answer is full of this nature only. Okay? ISA 250 requires the matter to be discussed with the management. So you also need to discuss this with the management and where appropriate. Rather than you saying discuss this, do this, always refer this to the standard. Okay. So ISA 250 requires the matter to be discussed with management where appropriate and those charged with governance also. It appears that some discussions were held as audit managers aware. You see this audit managers aware you are picking up from your scenario. Because of that, you can say that some discussions were held. If discussions were not held, how can the audit manager be aware? Definitely some discussion was there with the management. That's why that audit manager was aware and that the employee has been dismissed. The audit manager was aware that the employee has been dismissed. So, however, the discussions should have been formally documented. You are giving actions now. Okay? You should be in a position to give this. When you're practicing, check how well you're able to give them your recommendations or suggestions to do this or do that. If you're able to do that well, then this paper is not at all hard for you. And raise to the level of the group management as this matter could impact on the group and not just on the Honor company. If you see the nature of the answer, everything is in paragraph, not together in one. And each paragraph is talking about one single aspect only. Next, the audit team should have considered the potential implications for the financial statements. What are the implications on the financial statements who should consider this audit? So the non-compliance could lead to regulatory authorities imposing fine or penalties on the group, which may need to be provided for in both the individual and the group's financial statements. Audit procedure should have been performed to determine the amount, materiality, and also the probability of any payment or any penalty imposed. The individual and the group financial statements could be materially misstated. And given that an unmodified audit opinion has already been issued, this is a significant issue for James and company to now consider. You see, already you have issued what? Unmodified audit opinion. Now if you say that this is materially misstated, this is a very, very significant issue for the audit company, right? Now, in terms of reporting non-compliance to the relevant, so this will be talking about this. Reporting the non-compliance to the relevant regulatory authorities. ISA 250 requires that auditor to determine whether they have a responsibility to report. What does ISA 250 say? Whether the auditor has the responsibility also to report the identified or suspected non-compliance to parties outside the entity or not. First of all, they should check that. If the event that the management or those charged with governance of the company or the group fail to make the necessary disclosures to the regulatory authorities. Okay, if the company is not making that disclosure to the regulatory authorities, then James and company should consider whether they should make the disclosure or not. You just cannot directly make the disclosure like this to the third party. You means I'm talking from the auditor's point of view. You first have to see whether the company has disclosed it. If the company didn't disclose it, then you have to see whether you can make or not. You should consider whether you should make the disclosure or not. Okay, these are the steps. So this will depend on matters including, okay, how can you consider whether you have to make a disclosure? This matters on lots of factors. For example, it matters on including whether there is a legal duty, whether you have a legal duty, whether you by the law you are required to disclose this or not, or whether it is considered to be in the public interest to do so. If it is in the public interest, you have to disclose. If it's your legal duty, you have to disclose. It seems that this has not been considered so far, but in this case, it was not considered so far whether they actually have to make the disclosure or not. But the audit firm can still make necessary disclosure. So you see, this is like you are using judgment here. All these are your judgment answers that you are using here. It is not from your textbook whether they have to make or not. Some of you might say they might not have to make necessary disclosure. Some of you might say necessary disclosure. It's very open-ended, this type of questions. Because it varies from students to students. It's very hard to compare your answers with your friends also. You will see answers are totally different. That's because the way we think is different. The way we practice is also different. And finally, to the last paragraph for the last requirement before I officially finish this video. Okay, the code requires advisors. The code. What does the code say? It requires auditors to comply with the principle of confidentiality. And if disclose were made to be, and if disclose were to be made by the auditor, okay, then it would be advisable first to seek legal advice on the matter rather than just disclosing it like that. Because you, as an auditor, you have to comply with confidentiality also. You just cannot disclose it to the third party. You have a responsibility there, ethical responsibility, to keep the confidential information confidential. That's why you have to first seek legal advice. So further advice on disclosure in the public interest is given in the code, which gives examples of situations where disclosures might be appropriate. These examples include, what are those examples? References to an entity being involved. For example, if that entity was involved in bribery or, so for example, money laundering and all, in that case, you have the right to disclose it, right? For example, bribery or breaches of regulation which might impact adversely on public health and safety. That case, the court says, okay, they also clarify that in exceptional circumstances where the auditor believes that there may be an imminent breach of the law or the regulation, the auditor believes in some circumstances that there is a breach of a law, then they may need to disclose the matter immediately to an appropriate authority. In that case, they have to disclose it. They cannot follow the rule of principle of confidentiality under these cases. So the decision to disclose will always be a matter of the auditor's judgment. Auditor has to decide how much they want to keep confidentially versus what is the public interest and how the breach of the law and regulations. And where the disclosure is made in good faith, they have to keep that balance. It will not constitute a breach of the duty of confidentiality. This will not be considered as a breach of duty of confidentiality if we disclose it in a good faith for the public interest. For exceptional conditions where you believe that there is a breach of law or regulations, in those conditions, if you disclose, it will not be considered as a breach of duty of confidentiality. Okay. Tutorial note. Credit will also be awarded for the discussion of relevant ethical threats to objectivity, which may arise in relation to the non-compliance, intimidation, and self-interest threat. Okay, so now let us go through the marking scheme. We have finished question number 2. I hope this gives you a good overview of how to answer 25 marks questions when it's relating to quality control and all. I think it's down. So if you see the answer, generally up to 2 marks for each well explained point. So this was for 8. So you can give 4 points. Okay. Okay, this is for question number 3. Okay. So for part A, Cameron, they have also given you all the possible answers. 1, 2, 3, 4, 5, 6, 7, 8. Okay. 1 mark if you say that there's a self-review thread and lack of professional skepticism for internal audit. Second, again relating to internal audit, insufficient audit work on internal controls and no understanding or evaluation of the year-end control. Third, again on internal control, thread of assuming management responsibility and general risk that ethical code has not been followed. Timing and reliance on control testing. Group audit firm has not been evaluated. No audit work performed. Implications of former partner joining the component audit firm and possible lack of competence of the group audit firm. So for this, all this you will be getting marks. All these points only you explained in different paragraphs, if you remember. Same for part B. If you see, lack of documentation, they didn't care of documentation. Subsequent event review was not performed. These are the points that you need to identify first. Then you need to build up answers and need to decide how many paragraphs you are going to write under each point. Then group related part is not communicated. These are the three things. Coming to C, they didn't apply professional skepticism when it was regarding valuation of financial asset. Asset was likely to be overvalued and inappropriate application of the group materiality. So there were three issues. Coming to part D, audit is incorrect, okay, that laws and regulations will not impact them. Second, they need to gain an understanding of the laws and regulations. Third, further evidence has to be there and it needs to be discussed with the group management. Provision of fines you have to take care of. This was not considered. Okay, they have a legal duty to disclose if it's for the public interest or if there is any imminent breach of laws and regulations. And finally, they may have to seek legal advice regarding the situation, whether they have to disclose in that situation or not. For that, they need to seek legal advice. So all this, you are getting points. Make sure that you first identify these points first and then you write the answers. And it is applicable for all the questions, whether it is your 50 marks question or whether it is your 25 marks question. You first have to identify these points from the scenario, then only you have to write. If you're not able to identify the scenario, that means your understanding of the scenario is not good enough, not up to the standard. You need to redo it until you come to that level. So this is the way of testing yourself whether you have understood AAA and you are able to write it or not. So inshallah tomorrow I'll be uploading the question number 3 from March and June 2021 paper. So till then, see you and don't forget to subscribe to my channel.